5-minute tax guides from your 5-minute tax guy. Short lessons to help you navigate the treacherous, hazardous, and totally unpredictable U.S. federal tax code. Child Independent Care Credit. The Child Independent Care Credit is one of the areas that the new Tax Cuts and Jobs Act doesn't seem to have touched. This credit shouldn't be confused with the child tax credit discussed in another video. You may be able to claim this credit if you pay someone to care for your dependent who is under age 13 or for your spouse or dependent who isn't able to care for himself or herself. The credit can be up to 35% of your expenses. To qualify, you must pay these expenses so you can work or look for work. Tests you must meet to claim a credit for child independent care expenses. The qualifying person test. The care must be for one or more qualifying persons who are identified on Form 2441. The earned income test. You and your spouse, if filing jointly, must have earned income during the year. The work-related expense test. You must pay child independent care expenses so that you and your spouse, if filing jointly, can work or look for work. The joint return test. Your filing status may be single, head of household, or qualifying widower. If you're married, you must file a joint return unless an exception applies to you. The provider identification test. You must identify the care provider on your tax return. In addition to the tests on the previous slide, you also must make payments for child and dependent care to someone you can't claim as a dependent. If you make payments to your child, he or she can't be your dependent and must be age 19 or older by the end of the year. You can't make payments to your spouse or the parent of your qualifying person if your qualifying person is your child under age 13. Physically or mentally unable to care for oneself. Persons who can't dress, clean, or feed themselves because of physical or mental problems are considered not able to care for themselves. Also, persons who must have constant attention to prevent them from injuring themselves or others are considered not able to care for themselves. Person qualifying for part of the year. You determine a person's qualifying status each day. For example, if the person for whom you pay child independent care expenses no longer qualifies on September 16th, count only those expenses through September 15th. Who is a qualifying person? A qualifying person is your qualifying child who is your dependent and who was under age 13 when the care was provided. If a qualifying person turns 14 during the year, you may count the days that you paid for care up until the day they turned 14. Your spouse, who wasn't physically or mentally able to care for himself or herself and lived with you for more than half the year. A person who wasn't physically or mentally able to care for himself or herself lived with you for more than half the year and was your dependent. Remember, a spouse is never a dependent. Child of divorced or separated parents or parents living apart. Even if you can't claim your child as a dependent, he or she is treated as your qualifying person if the child was under age 13 or wasn't physically or mentally able to care for himself or herself. The child received over half of his or her support during the calendar year from one or both parents who are divorced or legally separated under a decree of divorce or separate maintenance, are separated under a written separation agreement, or lived apart at all times during the last 6 months of the calendar year. The child was in the custody of one or both parents for more than half the year, and you were the child's custodial parent. The custodial parent is the parent with whom the child lived for the greater number of nights in the tax year. You must have earned income. To claim the credit, you and your spouse, if filing jointly, must have earned income during the year. Earned income includes wages, salaries, tips, other taxable employee compensation, and net earnings from self-employment. A net loss from self-employment reduces earned income. Earned income also includes strike benefits and any disability pay you report as wages. What isn't earned income? Earned income doesn't include pensions and annuities, Social Security and railroad retirement benefits, workers' compensation, interest and dividends, unemployment compensation, scholarships or fellowship grants except for those reported on a Form W-2 and paid to you for teaching or other services, non-taxable workfare payments, child support payments, any amount received for work while an inmate in a penal institution, and alimony. The flowchart on the right can help you determine if you can claim the credit. This chart can be found in IRS Publication 17. To find this publication, you can just do a Google search for Pub 17. Care Provider Identification Test. You must identify all persons or organizations that provide care for your child or dependent. Use Form 2441 Part 1 to show the information. Information needed. To identify the care provider, you must give the provider's name, address, and tax identification number. If the care provider is an individual, the taxpayer identification number is his or her Social Security number, or ITIN. If the care provider is an organization, then it is the employer identification number, EIN. You don't have to show the identification number if the care provider is a tax-exempt organization, such as a church or school. In this case, enter tax-exempt in the space where 2441 asks for the number. Limits. There are two limits to this credit. The earned income limit. The amount of work-related expenses you use to figure your credit can't be more than your earned income for the year, if you're single, at the end of the year, or the smaller of you or your spouse's earned income for the year if you're married at the end of the year. And the dollar limit. There is a dollar limit on the amount of your work-related expenses you can use to figure the credit. This limit is $3,000 for one qualifying person, or $6,000 for two or more qualifying persons. Amount of the credit. To determine the amount of your credit, you multiply your work-related expenses by a percentage. This percentage depends on your adjusted gross income shown on Form 1040 or Form 1040A. The table on the right shows the percentage to use based on your adjusted gross income. The credit is claimed by completing Form 2441 and filing it with your tax return. To claim the credit, you can file Form 1040 or Form 1040A. You cannot claim the credit on Form 1040EZ. For more great 5-minute tax guides, check out the other videos in my 5-minute tax guide video series. See the list in the description below this video.